The following documentation is not financial advice. The use of leverage above a factor of 10 is strictly prohibited in these models. Do not invest essential personal funds into the strategies modeled here. This analysis is part of a public model documentation archive. What follows is a purely observational chronological record of a specific mathematical cycle. It contains zero predictive analysis. This chart shows the initial geometric formulation for the NASDAQ 100 index, initialized on February 4, 2026. This sequence operates under cycle ID US100_4_4. The current operational state is Phase 1. The primary entry level, designated as coordinate M, is set at exactly $25,062.2. The secondary entry level, PFC, sits just below at $24,728. Deriving from these primary and secondary entries, we establish a mean entry point of $24,895.1. These specific coordinates form the rigid foundation for all subsequent risk and target calculations in this cycle. The structural time limit for this geometry is defined by a trapezoid time duration constraint of exactly 15 days. The third triangle domain percentage is calculated at 3.52%. Applying a risk coefficient of 2 brings the total risk domain to 7.04%. Working from a hypothetical capital baseline of $100,000, the expected max drawdown limit is strictly capped at 5%, or $5,000. By applying the risk domain percentage against the mean entry, the expected low price point is set at $23,142.5. This yields a total unit size of 2.85, resulting in a total position size of 0.28. Splitting this allocation, each trade size is exactly 0.14. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. Every element of position sizing is a mechanical derivation of these absolute risk constraints, eliminating subjective input, and $120. Target 2, positioned at apex N, is $25,495. Target 3 lies at the uppermost flat boundary of the blue trapezoid, recorded at $25,860. Assuming only the first entry is triggered and held to an exit at target 3, the expected profit for scenario 1 is $1,117. Over the model duration, this translates to an expected annual return of 27.25%. Incorporating the secondary entry and a partial exit at target 2, the expected total profit for scenario 2 increases to $2,191. This produces an expected annual return for the second scenario of 53.29%. These projections form the mathematical baseline against which we will evaluate the final realized data at cycle completion. Moving the timeline forward to February 10, 2026, this chart shows the cycle progression into Phase 2. Initial price action declined to $24,138, successfully triggering the secondary position at coordinate PC. Following the trigger at PC, the asset began an upward traversal. The market climbed until it touched the delayed mirror precisely at $25,270. With both initial positions opened at their respective M and PC levels, the cycle actively navigates live market conditions. This confirms that Phase 2 objectively executed the delayed mirror touch strictly according to the parameters established in Phase 1. Advancing to April 14, 2026, at 12:20 Eastern Standard Time, this Phase 3 chart illustrates a prolonged period following the mirror touch. The price fluctuated 3 separate times outside the trapezoidal time boundary, moving continuously between PC and target 1. During this lower-level traversal, $944 accumulated within the cycle's safety buffer. This accumulation directly adjusted the structural risk boundary down to $22,772. When the price later dropped sharply to $22,782, the structure remained intact, missing the downward boundary by just $10. The price eventually rose to touch target 1 for the 4th time. This mechanically triggered the release of half the positions, increasing the safety buffer to $1,260. Upward movement continued until the price reached apex N, automatically triggering the release of half of the remaining positions. Upon completing Phase 3, the open position size stands at 0.7. The safety buffer holds $1,680, and the final adjusted risk boundary is secured at $22,509. Through rigid execution of these waypoints, the cycle successfully de-risked itself without requiring subjective human intervention. Finally, we observe the current Phase 4 timestamp on April 14, 2026 at 1920 Eastern Standard Time. This chart captures the ultimate cycle resolution. Immediately following the completion of Phase 3, the asset entered a steep upward trend. The precise moment the price touched the trapezoid upper boundary was recorded at $25,860. This triggered the automated closure of all open positions, resulting in a closed position profit of $675. Adding the $1,680 released from the safety buffer brings the total cycle profit to $2,355. Comparing the metrics, the expected return was originally projected between 1.12 and 2.19%. The officially realized return closed at 2.35%. The expected drawdown was strictly capped at 5.00%. The realized drawdown reached a maximum of negative 4.97% at the lowest price dip of $22,782. The initial expected trapezoid time duration was 15 days, while the realized time duration absorbed 69 days. Cycle US100 4 completed its full geometric path. It successfully absorbed the time duration variance while operating strictly within its predefined mathematical parameters.